You're listening to Mr. Credit on San Diego 1700 with local credit expert Derek Evans. Now, live in studio, Mr. Credit.
Welcome, San Diego, to Mr. Credit here on 1700 AM. My name is Craig Sawing. I'm actually filling in for Mr. Credit, Derek Evans himself. Derek is out traveling, visiting his family in Missouri and other states. Not sure exactly where, but he's out with the wife and kids, so I'm going to be filling in for him. Again, my name is Craig Sawing. I'm a real estate expert, so we're going to talk a lot more about real estate than credit today, and I'd certainly like to answer any real estate questions that you may have. If you'd like to join into the show, the number is 858-320-0068. But to start, let's go ahead and talk a little bit about credit and how it relates to real estate. Mr. Credit himself, Derek Evans, is actually a very good friend of mine. I listen to this show regularly. We've done a lot of business together. He helps a lot of my clients. I own a mortgage company in Mission Valley called Benchmark Mortgage. And he has become a very relevant part of my business and the overall marketplace here in San Diego for what he does for clients looking to buy homes or people that are going through things such as short sales, foreclosures, and loan modifications. The list goes on and on. But we've worked together a lot, and he's done a tremendous amount of work for people that I work with, in the sense that to be qualified to buy a home in this marketplace, you're typically needing around a 620 credit score, and often we'll have buyers that have had unfortunate circumstances in their past that have made it so they're not able to buy. Well, in this case, or in the case of our clients, what I'll do is I'll refer them over to Mr. Credit, Derek Evans, and he takes a look at it and does whatever it is the heck that he does, and gets those scores up and puts people into a position to be able to take advantage of the American dream and buy a home. So really thankful to him for that, and thankful to him for allowing me to host this show for him here today while he's out of town enjoying his family. So one of the things I really wanted to cover, Mr. Credit, Derek, he basically gave me a lot of emails that you all have sent to his website with questions about real estate, and I think that he just wanted to put those on me here today so that I could help answer some of these emails. Some great questions. I had a chance to look at them earlier. Not too specifically, we're going to really be shooting from the hip, but some of the questions I saw were really intelligent and in-depth, and I'm happy to help you with that. If you have any credit-related questions as well, let me go ahead and give you Mr. Credit's website. You should always go here, whether you have good credit or bad credit or something in between. It's always important to stay on top of this. So I would encourage you to go to www.mrcreditsandiego.com. Mr. Credit himself hosts the site, and if you have any questions, you can contact him through that. So I think that's where a lot of these questions have come from. And the first thing I really wanted to cover here today was interest rates on a mortgage. It seems like many of you are curious how mortgage rates work, when you should lock versus not locking. I mean, the questions were really all over the place. So what I'm going to try and do is break it down in a way that makes sense for you in a simple format, as well as how it's relevant to credit. Given the name of the show is Mr. Credit, it seems only relevant that we would do that. So first thing I'd really tell you when it comes to interest rates on a mortgage, for those of you who are in the market buying right now, there's a couple things you have to do. First of all, you have to align with the right people, and unfortunately, that's where I think the biggest mistake occurs, is that people are often out there looking for a cheap loan, and that's exactly what they're going to get. Or in the realm of working with a real estate agent, a lot of times people are just looking to do something like redfin.com or work with just the first agent they meet, and you do yourself a tremendous disservice. So what I really want to encourage anyone out there who might be looking at buying a home right now is you have to work with somebody that you trust, because the paperwork involved, all of the steps involved with buying a home, from the real estate agent to the mortgage professional to title, it's just too much for you to understand. If you have a job, a family of your own, it's not something you're going to want to get too involved with, and you're going to end up doing yourself more disservice than good. So number one, work with somebody that you trust. And to find that person, there's several different ways you can go about it. So what I'm referring to is mainly the real estate agent and the mortgage banker that you're working with. To find someone that you trust, the steps I would say would have to First and foremost, there's a book by an author named Bob Beaudine, who I met years ago, called The Power of Who. The Power of Who is basically telling you to leverage yourself through people you already know. Not try and go find people that you don't know, but reach out to those that you do know and see if they can help you. So either you already know somebody in these industries, or find someone that you know that does know somebody. And I think that that's a really good place to start, because if you're friends with the person you're working with, there's a much higher likelihood that they're going to take care of you and do a great job for you and give you all the information that you need. Now, I'd say the next step in understanding how interest rates are going to work with the financing, you have to know that interest rates are not something that are just quoted from a bank or determined by the Fed. The reality is that interest rates are determined by the market. People really get confused on that. I know that someone looking to buy a home, your first thoughts are, what are my rates and what are my costs? And the common misperception is to think that you should just go speak with multiple lenders out there and just price quote one versus the other. But the problem you're going to run into with that is that each lender who is after the first one, let me rephrase that, every lender who follows the quote before it is going to quote something lower. So if the first lender quotes you on Monday at 5% and you tell that to the second lender on day 2, they're going to tell you 4.875. That's the salesmanship of the business. That's something you really want to avoid. So you got to understand that the market is going to control interest rates more than anything else. So again, work with someone you trust and know that it's market conditions. So let's go ahead and really analyze today specifically what's happening in our marketplace and how it's affected interest rates. When you're pulling out of a deep recession like we've seen in this economy, you're going to find that there's a lot of money going back and forth between the stock and bond market. Well, it's the bond market, specifically the 30-year mortgage-backed security market, which is what affects interest rates. So if you think about it like that, and there's all this money moving around between the stock and bond market, and interest rates are controlled by the movements of the bond market, you can understand that there's going to be a lot of volatility in what's happening there. So working with someone you trust, they're also going to have to take you're going to have to give them faith, I would say, and trust that they're going to lock you at the appropriate time. Today specifically, I'd say the biggest topic on hand, I was discussing it this morning with some clients that I had, actually a few times. It seems to be the most relevant topic these days, is what's happening in Greece. Now, it is not really that fun to talk about other countries, but at the same time, we really do have to remember, people, that we are in a global economy. So it's not just affected here, or what happens here, but it's what happens around the world. And those global economies and markets, they push money into the U.S. bond market, and that's what really has an impact on interest rates. So last week we saw the Dow Jones dropped middays almost 1,000 points, and since that day we've had a lot of ups and downs and a lot of volatility. Well, as bad things happen in our economy, that tends to move money into the bond market because it's a safer investment. So money moving into the bond market causes bond prices to move up, mortgage rates to move down. So think about it this way. Typically, bad news in the economy is good news for mortgage rates. So it's kind of a catch-22 there. You don't really want to, or we'll say bittersweet, you don't want to cheer for the economy to do poorly, but it does help mortgage rates. So what's happening out there in Greece right now is that you have all of this money that is terrified in our global markets, and it's causing the investments to move into the safe haven of U.S. bonds, and that is really helping mortgage rates out tremendously, actually. Where the government left off on buying mortgage-backed securities off the marketplace about 2 to 3 weeks ago, the natural market has really picked up and helped to support those low interest rate levels. So I guess I'd give you a little advice here. If you are a homeowner, you're looking to be a homeowner, you're a potential buyer, then you have to get off the fence. I know that a lot of us were looking for that tax credit that expired on April 30th. To me, the tax credit's irrelevant. It didn't really it helped spur some movement in the economy, but I don't think it was necessary to think that buying a home in this marketplace makes sense. So I do want to say we are most likely going to be in a rising interest rate environment this year. I don't want to put specifics on there, but I do think there's a lot more room for them to move up than down. So if you're interested in buying a home, you should certainly get in the game sooner rather than later. And that's assuming it fits into your short and long-term financial vision. and make sense for you and your loved ones and your family. So if you have any questions with that, you can reach out to me personally. I'd love to help.